Good morning, everybody. Mike Tedeschi over at Perspective Wealth Planning. Got a lot I want to cover in this week's video. We're going to take a look at the four major U.S. indexes, and we're also going to take a look at record call buying. The speculation that we have had here over the last few weeks has actually been historic. It's never been surpassed, and I'm going to discuss that. Technically, this market still looks extremely strong. When we start looking underneath the surface at sentiment readings, at how far everybody is loaded on one side of the boat, there becomes reason to be a bit concerned up here. So let's jump right into it. So technically, the S&P 500 still grinding higher. It's what it's done since it broke out of that ascending triangle pattern that we discussed last year. We put our first target on, we had like 3280. Our next target's at 3,400. So, we're still just above that first target. So, again, the market still from that breakout could certainly continue to run higher. When we take a look at RSI, we're hanging just around that 70 zone. So, a little bit above, a little bit below, a little bit above, a little bit below. Basically, anytime the market's dropped below that, it's used, that overbought to not overbought rating as kind of a trampoline to continue to head higher. We'll see if that continues. When we take a look in at the Nasdaq, it's not dropped back underneath that 70 RSI rating here for quite some time. Just continues to rock and roll higher. 100, the 10 over the 20 over the 50. It's over the 200 moving average there as well. So, market just continuing to grind higher. When we take a look at the Dow Jones here, same thing. Last couple of day action's been a little bit weaker than the rest of the indexes. But it's hard to call this, anything weak, even if you were looking at this a short time frame here. That could, of course, be a flag before we continue to push higher. All those moving averages are pointed up. They're all set up the correct way. So, the market has been trending higher and continues to do so. When we take a look at the Russell, this is a little bit of a concern. This is the line that we've had drawn on the chart for quite some time. As you guys watch these videos, you see them on there. We ran right up into that resistance level, that important resistance zone from back in last year, and we have turned down from it. That's certainly worth paying attention to. The moving averages still are all aligned here. We are not over that 70 RSI zone. The Russell has been the weakest, continues to look like it's the weakest of the indexes. And again, I think it's an important area to pay attention to just from a risk-on, risk-off standpoint. Next thing I want to take a look at, guys, is I want to take a look at the Nasdaq Mcclellan Summation Index. We talk about this all the time. Now, if we look here at this chart, we had that major breakout back here at 300. We talked about there being that kind of resistance point right in here. We broke above it, and we're starting to get that crossover right here over the last session or two. Again, that doesn't mean we're going to turn down or anything like this. Right, we had that crossover here. We based for a little bit before making that next push higher. So we'll continue to pay attention to it as long as we're up in this zone, kind of holding over that 500 level. Breath readings are still solid. So that is certainly a check mark in the column for the bulls at the moment. Next couple of data pieces we want to take a look at come from SentimenTrader. We've talked about this before. The smart money, dumb money confidence spread, the gap continues to widen. It just keeps getting bigger and bigger and bigger. And you can look at this chart going back over the course of a few years here. They do cross quite frequently, right, when the market does make some sort of a pullback. Look, the market at some point will make a pullback. This gap will close down, right? It doesn't mean that, again, the market's going to crash or anything like that, but we never just go straight up. There is always, kind of a two-step forward, one-step back move for the market over the long run. So we have made quite a step forward here over the last 3 months. We may be nearing that time where it's time to take, from those 2 steps forward, taking that 1 step back. So we're going to continue to watch and pay attention. But we would expect some point here for these to flip, right? And that would give us a, another good buy spot with a lower amount of risk at some point in the future. So we're going to continue to pay attention to that. But this, of course, as it continues to stretch further and further apart, is getting to be more and more of a concern that everybody is kind of on one side of the boat, and that is not necessarily a bullish thing. When we talk about everybody loaded on one side of the boat, let's take a look at the New York Stock Exchange speculative call buying percentage of volume. And it reached 12.5% last week, exceeding the prior week's level. When we look at this, this is net speculative behavior that is higher than it's ever been, right? about higher than we had back in 2000, 2000 and 8, 9. So this is of course a concern when we have that much rampant speculative buying. And there's a couple of other ways that we can take a look at this data that's really important. Right, it's one thing to take a look at just the call volume, but it's another thing to take a look at the opening versus closing. So this is the number of calls bought to open minus sold to open. Okay, so that is showing you the ability for people to essentially cap their upside gains from a protective standpoint versus just that speculative one-sided buying. And you can see, I mean, it has been higher over the last few years, but this is an incredible move to the upside here that we have got. So, I mean, this is, again, a very one-sided type of option behavior, which is cause for concern. We'll take a look at this in one more way. Now, those numbers that we just looked at before, if people were also picking up a number of puts, hedging their bets, right, it wouldn't be necessarily as worrisome. But when we take a look at the rampant speculation not being offset by hedging activity, this is as high as it has been since the dot-com blow-off top. And Jason over at SentimenTrader said, against everything that they follow over there, this kind of behavior is by far the most troublesome and should be a worry for anybody with a medium-term time frame. Right? This is one-sided option buying without hedging, and that dumb money, smart money, confident spread being as wide as possible. So when we take a look at the sentiment, when we take a look at how everybody is positioned, this is a very worrisome area of the market. And we talked about it in a previous video as well, but as we head here into earnings season, record number of companies' earnings have been upgraded by analysts ahead of time, right? So expectations are high. Everybody's kind of on one side of the boat. That could lead to some choppy waters here moving forward. So I wanted to lay that out, right? Technically, again, when we take a look at the indexes, when we take a look at the market, it's been bullish here for quite some time. All the moving averages and everything are lined up the right way. But in the back of your mind, you need to be paying attention to the fact that people are just buying call options at record rates, not hedging their positions, and pretty much everybody is in on the long side of the boat. And at some point here in the future, we are going to have some sort of a pullback. Judging by the way things are in terms of the sentiment, it should be a very quick pullback, but it could be a pretty deep pullback. Like we saw back in the beginning of 2018, where basically all across the course of a week or two, we saw a 10% pullback in the market. So just keep that in the back of your mind. As always, I hope you guys find these videos useful. If you guys have any questions or there's anything that you want to go over with me, feel free to reach out to me via email, or you can give me a call at 814-580-9881. I look forward to seeing you guys next week. Take care.